If all of your money is invested in land, you can't move it. So when you have to leave the country, and you might flee the country, or you just might emigrate because maybe you can't get a job there. Maybe you can get a job in New York, but you can't get a job in South America. So you want to move to New York for your job, but you can't take your property with you. That's a problem. The second problem is it gets taxed. If I had $100,000 of property, even in Florida, let's say, there's a 2% property tax a year, and there's a maintenance cost. So the maintenance cost is insurance. You got to paint it. Maybe there's a water leak. There's all sorts of things to maintain a building, maintain a house, even to maintain land. There's a maintenance cost in the form of property tax. That maintenance cost can get to 2 to 4% of the value of the asset. So that means that if you divide 4% into 72, in 18 years, you're going to lose your property. Right? If the maintenance cost is 4%, then you spend the entire value of the asset in 18 years to pay the property tax and the maintenance. But it's worse than that, because normally if there's inflation, the value of your property will be assessed up by the tax collector. So if I print 10% more money a year and I raise the value of your property by 10%, I raise your property taxes by 10%. So you started out with $100,000 of property. In 20 years, when your daughter or your son inherits the property, it's valued at $10 million, and there's a $400,000 tax on it or $200,000 tax on it. And they're paying more in tax than you paid to buy the property. So have you heard the story of all the families that lost their farm or lost their family home because they couldn't afford to pay the property taxes on it? It's a very common happenstance in the last 100 years. So if you wish to store intergenerational wealth and give it to your children and your children's children and your children's children, property doesn't work unless it's rental property. If it's commercial property and you can generate more rent on it than the tax and the insurance and the maintenance, then maybe you can maintain that. But you can't just maintain a low performing, like a not very profitable farm or a home. It won't work. And ultimately, if you have that property in the wrong place, right? If you had that property in Nazi Germany in 1935, you lost it all, right? If you have that property when the regime changes, you may lose it. So property doesn't turn out to be a good way to store your family's wealth over 100 years. The maintenance cost is too high. It's subject to inflation. It's subject to confiscation, and it's subject to taxation. And those are three problems. And those are the problems. They're the problems that cause most families and most corporations to go bankrupt. Either they're taxed out of existence, or what you own is confiscated from you because you're the wrong religion or the wrong color or the wrong ethnic group or the wrong place at the wrong time. They are seized by eminent domain, or ultimately it's just taxed. If you have $1 million of gold stacked in front of you, you can see it, but so can criminals, and they'll take it from you. And if they don't, the government will take it from you. And every single country seized the gold of their citizens, or the bank stole the gold of their citizens in the last 100 years because it's tangible. If you had $1 million in property, you can see it, but so can the tax collectors. And when they need to raise money in your city to pay for schools, they're going to tax your property. And when the government wants to fight a war or they want to do something, they're going to tax your property and you're going to lose it. If you have $1 million of Bitcoin, they can't see it. It's less likely you'll get robbed by a criminal. It's less likely you'll get taxed. If the city that you live in has a municipal tax on your property, you can move your Bitcoin to some other city. If the state taxes it, you can move it to a different state. If the country taxes it, you can move it to a different country. Ultimately, you can find someone to buy your property. If it's digital property, if it's analog property, if you have the most beautiful thing in the city where you live, and I don't want to live there, I don't want it, right? If I have a piece of property in Istanbul, people that want to live in Istanbul may buy it, and banks that bank property may lend you money against it. And they'll lend you money in the currency of the city. So you can maybe get a loan in Turkish lira from a Turkish bank, and maybe you can sell it to another Turkish person. But you see, that's a small part of the world. Only 0.1% of the world has money in Turkish lira that wants your Turkish property. Wouldn't it be much better if you had a digital hotel that you can move to any city in the world, and then you could borrow money in any currency from any bank, and you could sell it to anybody, and that makes it universally desirable? So it's counterintuitive. Your first response is, yeah, I want the 20th century solution. I want the gold because I can touch it. I want the house because I can live in it. Look, if you're going to live in the house, by all means, own the house. If you're going to own property for your children, get your dream home, buy the car to drive in. If you love art for your wall, buy that and put it on the wall. Put a sculpture in your backyard, right? It's okay to buy property that you or your family can touch and feel and you love and you need. My point would be, if you're going to buy $1 million warehouse in Kansas, or you're thinking about buying a building in Singapore, you might be better off to buy the Bitcoin, because the stuff in Kansas has a much smaller group of people that want to finance it or want to buy it. And the same is true with the building in Singapore. And let's come back to the theory of property. Why is property valuable? If I own a building in Las Vegas, if I can borrow against it or mortgage it, that's valuable. If I can sell it, that's valuable. If I can develop it, if I can add 20 more floors on top of a 10-floor building, that's valuable. If I can lease it or rent it out to a casino or a bank, that makes it more valuable. If I can put a lien on it, if I sell the air rights above my building for $10 million to the building next to me so they can build their skyscraper, that's valuable. So when I own the property, I have valuable rights. If I actually owned a share in a REIT, if I was a limited partner in a real estate investment trust, I would own a security, but I wouldn't have the rights of property ownership. You can't mortgage a share of stock, and you can't lien it, and you can't force the building to be developed, and you can't rent it, take it away from one deadbeat renter and give it to a better, higher value client. So your property rights are much weaker in a security than they are in unfettered property. So yeah, I want to own the building, but you got to be a rich person to own a building, and you need a team of property development managers to manage the building. And here's the big idea. That's analog property. Digital property could be developed in many more ways. Any computer programmer can develop an application to improve your digital property. So for example, if that 1,000-room hotel in Vegas becomes a digital hotel, the first thing I do is I can move it from Vegas to New York, and I can move from New York to Japan during the Olympics. So now I can find the city that will pay me the highest price for my room nights. Okay, that's good. Well, if the taxes go up in Japan, I can move to Singapore. That's better. So you see, my digital property is less taxed and it generates a higher rental income. But here's the other thing. The frequency of the property increases. You can maybe rent a hotel room for a night in Vegas, but what if I could rent it for an hour? What if I rented, instead of 1,000 room nights a day, I rented 24,000 room hours a day? And what if I could split the room hours and rent them between Japan and Tokyo and Singapore and London and Paris and New York and Vegas? Now I've decomposed my hotel. Now, what if I decompose my hotel down to room minutes? And what if I basically sold out the room minutes in 1 million different places and I recomposed it? Now that digital property is starting to look less expensive to maintain, less likely to be confiscated, higher yielding, generating a higher average price. And I'm going to have, I'm going to go from 100% occupancy, where I sell 1,000 room nights a night, 365 days a year. And I'm going to go to 10,000% occupancy, because I'm going to be selling out room minutes at a triple average rate to the highest bidder.